Peter Dunworth. I've been following him for several months now, and the way he explains his arguments and the fundamental ethos of what Bitcoin is meant to portray and the value it provides to investors and the ordinary person, man or woman on the street. Very interesting analogy where he started off the business about whether an asset is between the stages of a want versus a need. It's clear to me that the analogy is given there is the production of oil at that time, the 19th century, was really limited in capacity based on the technology that was made available at that time. So it seems logical enough to say that there's only going to be in the thousands of barrels per day that could be generated on a single day. Makes sense. But as the decades and the centuries unfold, and the recognition by everyone that needs oil and used oil, it seems logical to assume that hundreds of millions of barrels a day production, given today's state of technology in efficiency in the pumping and the drilling of oil from the wells, from the land masses themselves. So you can see the actual progression from a few thousands to now hundreds of millions of barrels being produced a day, which is remarkable testimony in terms of humanity, innovation in technology and improvement. Now that is an example where oil production started out as being a want to actually being a need. And what he's projecting there is, through that analogy, that Bitcoin is in a similar sort of situation, where at the moment it's viewed by the few as a want, but if you compare to the rest of humanity, which is the 8 billion of human beings living on this planet, it's going to become a need. And that is what he's trying to project through this analogy, that Bitcoin indeed will be that next most important thing a human would need to have it. Even though only 1 million of us currently know about it, what it stands for, what it provides, what is its attributes, what is its value to society, preserving the capital, growing the capital in the long run, only 1 million of us more or less understand that ethos. But if you compare it in the next 10-15 years from now, where the rest of us, the 8 billion of us, will understand it, start to invest in the asset, where you can see the repercussion that would have on its price in 10-15 years from now. And this is where he moved on to the explanation on how market capitalization works, how it's calculated. And it couldn't be any simpler. It's basically taking the current price of Bitcoin, let's say it's now 100,000 as the current price. If you multiply that by the current mine units of Bitcoin, which is around 20 million, well, if you multiply that with the 20 million, you can say that it's in the $2 trillion market cap, which is in fact what it is. Well, if you take that calculation and then trying to extrapolate what the future price would be in terms of market capitalization 10-15 years from now, and this is where he predicts more or less it will be in the 14 billion per coin. I'll leave that to your judgment, but it's fair to say that it's going to be significantly higher than 100k, which is its current present value. If you measure it based on purchasing power, and if you measure it as a basis of a need rather than as a want of the asset, which is how it's viewed by many of us investors, and not even counting the rest of the 8 billion people out in the world who aren't really familiar what Bitcoin is that actually is or meant to represent. So you can see the huge upside potential. There's a certain logic to that, and I think it makes sense. Now, moving on to the rather more interesting aspect, which is around the notion of the under-collateralized system that we are in the fiat world, in TradeFi, traditional finance, where we are in this inverted pyramid situation, where unfortunately the entirety of our wealth is based on debt, where we have a huge mass of debt with a tiny proportion amount of equity that we actually own as collateral. That is an unsustainable system, which makes total sense. We've seen in the news where the US, let's take the US as a prime example, they're in an unfortunate predicament of having to clear out their $37 trillion national debt with a rather minuscule GDP as collateral. So the US is in this situation. But it's fair to say that if the US find themselves in this situation, you can think how the rest of the world is actually in a much more inverted pyramid situation. So that is the current status quo. it's non-sustainable, and there's going to be huge problems. We've already gone through the GFC, the global financial crisis of 2008, where we had to rescue the banks from our taxpayers' money. If you think about the next crisis that comes around the corner, and we're still in this inverted, under-collateralized situation, where you can see how much more of a pain we would have to suffer. So what he's trying to say is, in order to avert that situation, to avert the next financial crisis around the corner situation or risk, he's trying to explain, well, it would be better if we convert this under-collateralized pyramid structure, where we heavily have debt on top of a small amount of equity, into one of over-collateralized system. Now, to do that, he feels that given that Bitcoin, one of the major attributes of Bitcoin is finite supply, i.e. its scarcity attribute, which is for me the king of all attributes that Bitcoin has. It has many, but for me that is ultimately the key one, is the 21 million scarce attribute, which is the perfect attribute for sound money as a store of value. He's saying that if we move into this over-collateralized system where we pour all of our wealth into Bitcoin over time, well, we'll be effectively transitioning from an inverted debt under-collateralized system into one of a over-collateralized system built on Bitcoin, where we'll see all the capital inflows from TradeFi pouring into Bitcoin to become much more stable, collateralized system on Bitcoin. Now, this makes sense to me, and there'll be huge advantage there. What would be the immediate advantage I would see if we're in this situation? Well, in order to do that, people have to have a longer time horizon. So get into the habit of save as much as you can and defer your spending to tomorrow. And if we see many of us falling into this kind of behavior pattern where there's certain things we don't actually need to consume, they're not important, let's face it. So it would be better if we save that money into Bitcoin, store it into the long term, and if we need to make expenses like that next hip surgery that we may have, or if we need to generally move into a larger house at that moment in the future, then it will make sense to spend a portion amount of our Bitcoin wealth in the future horizon to support that need. Now, if many of us fall into that spending behavioral pattern, then we will be certainly in this over-collateralized situation rather than the inverted under-collateralized system where we find ourselves, unfortunately, now. Huge debt, huge problems, and a huge risk, particularly if there is going to be this next GFC around the corner. This, for me, are the key takeaways. Pouring in our capital and our analog wealth, whether it's in real estate or in arts and collectibles, let's say, into Bitcoin in order to reach this over-collateralized situation, then the repercussion is not just the spending behavioral pattern that I explained a moment ago, but also it would mean bringing down the price of these assets, the real estate assets, which is stupidly high at the moment. It's not just me saying it, or even Peter saying it. There are many other economists who are advocating the same prediction if we were to do that. I think it would be good news, particularly for first-time buyers who are wanting to buy their first property, but they are unable to do so because of this super amount of money for real estate. So for me, these are the key takeaways from this episode from Peter. Like I said, I'm very fascinated. I have been following him for months, and what he says makes total sense. Maybe with the exception of the prediction, maybe it's a bit far-fetched, it's $14 billion per coin in the next decade or so, but certainly given what the rationale and the explanations given plus my own takeaways, I'm fairly confident that if you hold your Bitcoin wealth into the long term, I think we can all agree, and given its finite set of supply, 200 million coins and no more than that, then we'd be very, very comfortable that we're going to see some exorbitant gains at the end of our holding period in the long term. So this is the message I'd like to leave with today. If you enjoyed today's episode, please don't forget to hit the like button, to share the video with your colleagues and friends, and if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.